What does Paris compliance mean for an oil and gas company?
The great steps Shell, BP, Equinor and Total made in Europe is that they now have set targets for scope 3, the emissions of their products, something they didn't want to talk about before shareholders started voting for these kind of resolutions. So that's the big step. But they all promise to be net zero by 2050, but that's not going to bring us to the Paris Climate Accord. We need emission reductions in the next decade. And none of them is promising emission reductions by 2030. They all talk about 2050 without changing their business in the next 10 years enough to decrease emissions. As we all know, the Paris Climate Agreement asks for an emission reduction of around 40%, 40. And none of these companies, despite their great promises, have set these kind of targets and therefore have not invested in a different way as they did in the past.
Is it what investors want, that oil companies start to set very ambitious targets even for 2030, or what do we exactly want?
It's a good question. I think I will agree with Mark. The bar on climate is not static, and many investors really do want to see more ambition on climate from the oil companies. I would say that specifically they want to see deeper cuts to absolute emissions this decade. They want to see wider emissions boundaries, i.e. including all scope 3 emissions worldwide. They also want better disclosure. So all of that is true. They want all companies to be Paris compliant, and that is to aim for a well below 2-degree pathway. I don't necessarily think that they want the companies to be compliant with a 1.5 scenario pathway. So just a slight nuance there. I think more importantly, though, the investors want to see that the companies are transforming themselves. You know, there are two components to the energy transition. One is to cut greenhouse gas emissions, and the other is to increase the supply of low carbon energy. And really, investors want to see both. They want evidence that the oil companies aren't just going into wind down mode, because that is not a great investment proposition, and that the companies have a plan to become genuine actors of the energy transition. So I guess the question is, right now, which one of these two imperatives matters more to investors? From what we see, evidence from share prices suggests that investors put probably a higher weighting on growing in clean energies than on emission reductions.
Adam, you're one of these investors. Would you agree that, I mean, is this what you want? On what side of the spectrum would you put yourself?
Well, I think there's a very clear message from $54 trillion of assets that have unified behind very clear asks of the oil and gas sector that we need to see targets aligned to the Paris Agreement. And that means net zero plans, that means net zero targets, and that means embedding an understanding of what the International Energy Agency 1.5 degree scenario means for an oil and gas company. I disagree that winding down a company isn't a legitimate strategy for an oil and gas company. I think that might be the best placed strategy. To assume that all of them are well placed to diversify into renewables, I think is not necessarily a view held by the whole market. And I think that it's incumbent on the management of companies to discern a path that's appropriate to what they think is best for the company and to bring that to shareholders. And for others, that means working very much through their value chains with their customers. Others, it's going into particular ways and particular technologies. And for some, it may be that they actually best is to run their existing assets and return back to shareholders so that they can reinvest those returns in the renewable businesses that will also flourish alongside the industry. So I think it's a mixture of all of these things. And I think it's important that investors signal that we are willing to acknowledge all of these as potentially part of a strategy of a company, but we then need evidence of the practical application of that strategy, the capital alignment to it, and an unequivocal evidence that their targets match the aspirations that we have. But I'm also very conscious so much of what the oil and gas companies do, we have an enormous focus on them each year, but actually so much of what can be done is dependent on change in demand. We need to shape the demand that ultimately will enable these companies to transition or not. And that means we've got to work through aviation, shipping, road, haulage, etc. That's where we can actually make the fundamental change, and the companies then will have to be responsive to that. Just getting them to make all commitments without any expectation that we reshape demand is just not going to be a strategy that delivers ultimately.
Adam, since you brought up Shell, of course you are a very prominent voice in the fight against climate change for the investors' side. But how do you explain to other investors who voted for the Follow This resolution, which asked for stronger targets, that you voted against and that you support Shell's current strategy, which involves increasing emissions this decade? That's something investors have more and more difficulties to understand. So at the AGM, of course, you say you have to do better, Shell, but at the same time, you vote for their current climate strategy, which is by far not Paris consistent, and you vote against a resolution which asks for Paris consistency. Which Adam Matthews should investors believe in this?
Well,
in this case?
I mean,
the one who votes or the one who talks?
No, Mark, look, I know you've got an agenda here, and that's fine. I think it's quite clear.
My agenda here, Adam, is
no, Mark, let me finish.
My only agenda, and I hope to get you on board on that. And you're giving Shell the opportunity to say, we can continue on this strategy because we have the support of Adam Matthews, we have the support of the CA100+. And that's my agenda, fighting climate change. And
which is what we all share. We all share that agenda, Mark. We all have that, and it's a question of tactics. A shareholder resolution at a single AGM at a single point is a tactic, and you can choose to support it or not in the context of your engagement with a company. As an investor, I think you have a number of other levers that you can pull. We're in an intensive engagement with Shell, and we have very clear objective by 2023 to ensure that the companies that CA100 is engaging with are aligned to the benchmark that CA100 has created, that is tracking the commitments and measuring them against these goals. And so whether you voted for your resolution or not, I think it's whether you make a judgment as to how that fits in the context of achieving the goals that we have set out for Shell. The strategy that Shell put to the vote, let's be clear, it was a strategy that's the first in the oil and gas sector that was put to a vote. It advanced Shell's position quite considerably from where it had been. It still has distance to go. We have another opportunity to vote on it next year. And my expectation is that you'll see further developments in the engagement with Shell that will close the gap that we've very clearly identified. To not vote for your resolution at that particular AGM is a judgment call for any investor to make, and that's up to them, and they need to go through their internal processes to make that. As to whether we get Shell to the ultimate goal, I think it's a range of interventions, including the work that Shell Climate Action 100, and let's see where we get to. I'm confident we'll get there.
All right.
Thank you. Thank you. Let's move on.
Let me just make one quick remark on that, Philippe. The
Very
issue,
quick.
of course, is that Shell keeps on saying privately and publicly that their current strategy is good enough for Adam Matthews, the Church of England, and the lead investors of the CA100+, and therefore for the CA100+. So that's a very troubling signal to an oil major, say, voting, okay, your strategy is good enough. So that's really, Shell is using the CA100+ now as an excuse not to step up their ambition. They still want to increase emissions, and that's the real issue here.
Mark, I disagree with you in the sense that I think I was absolutely clear at the AGM of our expectations, that we acknowledged that progress had been made. And I think it's fair to acknowledge when people make progress. And equally, we acknowledge very clearly that we have expectations for the company to go further. And we underline that from the Church of England Pensions Board, that if there is not that alignment by 2023, we will disinvest our holding. Now, I hope we don't get to that point, because I hope that we succeed in engagement, which includes sometimes decisions to vote on a resolution or not, sometimes to back the company publicly, and to put further pressure on in the discussions and to continue that dialogue. And my sense is that we're on a trajectory. Shell will be making further announcements, I'm quite sure. And let's see where we get to next year's AGM and by 2023. But I've been clear, if they don't get in line on that path, we will sell our holding.